Hey everybody, Tim Rhey with True Rate Mortgage Group, and we're here to talk about a loan you may have heard of before. It's called an FHA loan, and specifically if an FHA loan is right for you. So let's break it down. Now, an FHA loan, or Federal Housing Administration loan, is a mortgage designed to help people who may have lower credit or limited savings for a down payment. Because the government backs these loans, insures these loans, lenders are more likely to approve them, even if your financial situation isn't perfect. So what's the catch? Well, let's start with the basics, okay? FHA loans have a major perk: the down payment. Unlike conventional loans, which typically require 5, 10, 15, or 20% down, FHA loans will let you get in with 3.5% down. Now, there is a conventional loan that allows a 3%, and we will talk about that in another video. FHA loans will allow a 3.5% down payment, which is considerably lower than most loans. So if you're looking at a $250,000 home, which good luck finding, right? You're looking at a $8,750 down payment. Now, that's a heck of a lot easier to save up for than the usual $20,000, $30,000, $40,000, or $50,000 that may be required on a different loan. FHA loans are pretty popular because they're easier to qualify for, especially if your credit isn't perfect. It kind of makes sense for a first-time home buyer. With a conventional loan, you'll usually need a credit score of at least 620, but with an FHA loan, you can often qualify with a score as low as 580, give or take. Check with your lender. Every lender is going to be a little bit different. If your score is even lower, you may still get approved, but you're going to need a larger down payment, okay? Now, this makes FHA loans a great option for first-time home buyers or anybody who's had a few bumps or some issues with their credit. Now, let's talk about the downsides. Well, first, FHA loans come with two types of mortgage insurance. That's right. There are two types of mortgage insurance that you will get on an FHA loan. You're going to get upfront mortgage insurance premium, which is about 1.75% of the loan amount. And you're also going to have an annual premium, which is paid monthly. Now, that monthly mortgage insurance premium is added into your payment. So it's important to know this number so you can make sure you can afford the home. FHA loans also have limits on how much money you can borrow. And those limits vary depending on where you're buying. So if you're in a high cost area like maybe California or New York, you could have an FHA loan limit of $1 million or more. Other parts of the country could be in the $500,000 to $600,000 range. So it's important to know where you're buying to make sure that your FHA loan is within that limit. Now, the property you're purchasing for FHA has to meet certain health and safety standards. So if you're looking at a fixer-upper, it's important to note that the home must meet these standards before you can get approved. There is a loan called an FHA 203K loan where you can get financing for the purchase of the home and for renovations on the home. So let's say you wanted to redo the kitchen or redo the living room. You can actually get a single loan called an FHA 203K that's for the purchase and for the renovation. So bottom line, if you're a first-time home buyer, if your credit is a little rough or you don't have a huge down payment, an FHA loan could be a great option for you. On the other hand, if you're buying a home in a high-cost area or you want to avoid paying mortgage insurance, you're going to want to explore other loan options. Either way, it's a good idea to talk to a mortgage lender to break down your options and see what best fits your specific financial goals. Fun fact here, in 2021, about 10 to 15% of all home buyers used an FHA loan, with most of them being first-time home buyers or those with credit scores under 650. Now, the median down payment for FHA loans was about 6%. That has changed since 2021. So if your credit score isn't quite up to par or you haven't saved enough money for a down payment, an FHA loan could make sense for you. One final note I want to add here about FHA loans. When you talk to your lender, make sure you go in it with a goal-oriented mindset. And here's what I mean by that. Talk with your lender about where you could be in a year or 3 or 5 or 7 years. Many times buyers that we help into FHA loans want to refinance out of them as soon as possible, specifically if rates come down or if they gain enough equity to drop the mortgage insurance. So begin with the end in mind, have a goal-oriented mindset, and an FHA loan very well could be the loan for you. But make sure before you decide that you understand what all the options on the table are. Well, that's it today. I'm Tim Rhey, FHA Loans. Does it make sense for you? For a more in-depth conversation and evaluation, give us a call. We are always happy to help.